Hi, this is Zak Mir with the weekend edition of the US Chartbreakers here at Zak's Traders Cafe. Starting off with the S&P, and here you can see that we got this market closing above 4,200 for the first time in many months, and that obviously people second guessing the outcome of the debt ceiling debacle, and guessing that historically it normally ends up in the situation being resolved, but don't want to preempt that. Above the broken August resistance line there at 41.50, we're looking for a top of October rising trend channel target as high as 43.50 by the end of June, and only well below 41.50 really risks a break of the 50-day line at 4100 and then a push back down to the 200-day moving average below 4,000. But at the moment, rather looking to the upside, especially with the double bounce over the over the course of May for the RSI around the neutral 50 level. That tends to be a continuation signal on the upside. On to the stocks for this weekend, and starting off with the advanced micro devices. Here we've seen the shares not only gap through our previous target there at $112, but seem to be gapping towards the next level up at $135. We're looking for that by the end of next month. The way things are going, we might actually get that by the end of this month. In terms of the stop loss, probably the resistance area of Thursday, $121 is probably the best at the moment, although obviously it would be nice for it to be a bit tighter, but this is a fast moving situation. Moving on to stock which is a personal favorite of mine, just because I'm a bit of a fan of the AI type of technology. Here we've got C3 AI heading rapidly towards the target there at the top of that rising trend channel from back in January at $37. We were looking for that by the end of next month. Once again, the way things are going, it could be done by the end of this month. A stop loss at the moment, basically Thursday's resistance around the $31 level should be enough on this situation. Moving on to another favorite for the US chart breakers, largely because it's been an obedient bull situation. Here we've got Carvana, still looking for this to make a decent break, in this case through the 200-day moving average at $14. Above that we're looking for $21 as soon as the end of next month. But the good thing here really is the way that the shares gapped through the rising 50-day line and have remained above that. Support near term around the $10 area, $10.50 area over the near term, and while we're above that we're looking for a jump, probably another gap higher for the stock to complete the island reversal that we've already had. On to one of the biggest rises of Friday, Elevation Oncology, and here we already had a gap through the 200-day line back in March, and I suppose it's normally the case that you get another one of us in a similar vein soon after. Here we're looking for a target as high as $8, which is the resistance line projection from February last year. We could see that maybe by the end of next month, especially while we remain above the $4 area, which was initial May resistance. So above 4, looking for 8 over the next 4 to 6 weeks on Elevation Oncology. Blast for the past, I think, in the form of gap. Here we see the shares attempting to recover their poise. We've already had a bear trap below the old July support there around $7.75. Above that we're looking for initially the 50-day moving average around $9 over the next week or two. Best case scenario by the end of next month as high as $11 for the shares. Moving on to stock which we've covered a few times here, and looks as though it is quite promising. IONQ. Here we've managed to break the initial target here around $9. Above that we're looking for as high as $12.50 by the end of next month at a May 2022 resistance line projection. But the upside there, early value while we hold above $9, and obviously you can see that there's been a gap down during the course of this week, which may signal a top is in place. On to Marvell, which we covered earlier last week. Marvell Technology. Here you can see that we had the gap higher on Thursday. We were looking for as high as $61 by the end of next month. Obviously, we've had that well before, and now we're scrambling to find what the next target on the upside may be. At the moment, that would appear to be the line I'm just about to draw now, which is an old 1-year resistance line, May resistance line projection at $76, while we're above the old target there at $61. I'll call it $60. Then we're looking for 76 by the end of next month. Once again, that looks like a stock in the hurry, and we are pleased that it has continued to move. On to Nvidia, and probably one of the stocks of the year, one could say. Here we've had a good consolidation of Thursday's gap higher. At the moment, the longer we stay above $370, the greater the chance of a move up to as high as $480 by the end of next month. So it looks pretty dynamic there for that stock, and a lot of interest as well. On to Netflix, which has been checking my passwords and my location over the recent past, so that's obviously bullish. Here you can see that we've got a broadening triangle there from the autumn, or the fall as the Americans would call it, back in October. Here you can see that above the broken resistance area around $380, $375 rather, from the beginning of the year, we're looking for as high as $450 by the end of next month. So about 375, looking for 450 or more by the end of next month. 50 and 200-day lines both rising nicely in parallel now, and we're still not overbought. On to a stock which I did cover a little while ago, and it's one that you can't forget really, Presto Automation. Here we've had a bear trap from below the 50-day moving average, which is obviously was rather irritating, but we didn't manage to fill the gap, so that it's a very bullish sign when you bounce off the top of a gap for a stock or a market. Looking for that resistance line projection from September up to $6.50 by the end of next month, especially the longer we remain above the 200-day moving average around $3.50. So about $3.50, looking for $6.50 by the end of next month, as we've held that gap there from back in April. Just a few stocks to go now, most of them ones that you will want to remember. First one is Palantir, and here you can see that the share is still making good on the breakout that we've had, the double gaps that we've had this month. Still looking for $15 plus by the end of next month is what we were. So let's see if we can do that. And the upside value really well. We're above one of the initial resistance points on the way up around $12.40. Then we're looking for as high as $15.20 on Palantir. On to Tesla, which has regrouped after a test for support around the 150 to 160 area. Well, this falling trend channel that we've had really since February, but looking to break the 200-day moving average around just basically we'll call it $200. Above $200, looking for 280 on Tesla at the top of that broadening triangle from November. Support here at the rising 50-day line around $178. So that's the key there. We want to see that hold. And we've also had a gap fill as well this week, over the course of this week, so closing back above the April gap there around $180. So basically above 180, looking for 280 by way of a break of 200. Finishing off with a recent riser, which looks like it's still on the case to the upside, Vertiv Holdings. We had a break of the main resistance there at $18. Above that, we're looking for $22.50 as soon as the end of next month. And obviously the way things are going, we could see that much sooner. Very nice, decent bear trap island reversal, and then another gap higher. That shows this is a very strong looking situation. That's it for me today. More updates during the week.